Hey YouTube, what's going on? It's Patrick here at VectorVest, and today I'm going to be teaching you how to successfully manage a stock portfolio. I'll be talking about some tips and tricks on how to set up stops, where you should set them at, how to determine what size of a position you should be placing on each individual holding, and everything in between. So if you're ready to learn, as always, hit that like button, subscribe, hit that notification bell, so that way you stay up to date on all the content that we have coming out for you, and let's get into it. All right, welcome back. And so we're going to start off like we're a brand new investor just getting ready to get started in the market. Now, typically, if you're brand new into the market, you've had tons of friends, you've read tons of articles that have given you stocks to look at, and you have an idea of what stocks you want to get into. And so you put them into a list, or what we like to call a watch list here at VectorVest, and that's what we're looking at right now. Well, luckily, VectorVest does all the heavy lifting for you, and as we've talked about many times in the past, VectorVest gives a buy, hold, and sell rating on every single stock every single day. So for today's example, what we're going to do is we're going to assume that we had, let's say, $100,000 to start off with, just to keep the math easy. And this will become extremely useful later on, and you can obviously take what we cover here today and apply it to your own specific set of rules or your own specific portfolio as well. So as we can see here, out of 25 stocks, let's say that our friends gave us, we have 10 of them that have a buy here. So if we have $100,000 and we have 10 stocks that have a buy, the other 15 have a hold or a sell, we'll probably just focus on the stocks with the buy first and foremost. Because why settle for anything less than the best stocks in the list that we're looking at? So if we're going with 10 stocks, we have $100,000 we're going to start off with. We always recommend to evenly dollar weight your positions. So with $100,000, 10 stocks, that would be $10,000 in each of our individual stocks that we're going to be buying. The reason why we do this is because when we're evenly weighted between our positions, then if one of our stocks happens to go against us, if one of our trades doesn't become a winning trade, then it has a less of an impact on our portfolio. So therefore, I've seen this happen time and time again over my years here at VectorVest, where somebody sees a stock that's pulling back, they add more to it, and all of a sudden, the majority of their portfolio is in one stock, and if that one stock takes a hit, then their portfolio takes an even bigger hit than if they were just evenly weighted between the 10 stocks that they were holding. So what we're going to do is we're going to just simply highlight these here, all the ones with the buy. And we're just going to add them into a paper trading portfolio for our example here today. So I'm going to go ahead and add to a portfolio. And we'll create a new one. And we'll just call this YouTube. And $100,000, you can set your commissions up here. We're just going to say no commissions for now. Obviously not using margin or interest. And these are all going to be long. And we'll go ahead and say okay. Jump right into the portfolio. And here is our 10 stocks. Now that you hold stocks in your portfolio, the next step is knowing how to manage them properly. Well, let's go over some of the rules that we typically advise for our subscribers right now. So the first rule of thumb is what we like to call the 1% rule. Simply put, you never want to lose more than 1% of your overall portfolio value in any one position. So let's do the math. We had $100,000. 1% of the $100,000 is $1,000. $1,000 is 10% of the $10,000 we put in each of our 10 stocks. So therefore, we should set up a stop right out of the gate from our initial purchase price of no more than 10% on each of those individual holdings. Obviously, you can do less than that. Some people may like more of the 5 to 7%, but 10% is the absolute max you'd ever want to give back on an individual stock before you decide to cut your loss and move on. You can always get back into a stock later on, but at least that cuts the bleeding off right then and there, and you're never at risk if things continue to go against you. So that's rule number one. The second rule is what we like to call the 50% rule. This simply is stating that anything over a 10% gain on a stock, never give more than 50% of that total gain back before taking that profit and moving on. So let's put some numbers behind that for you guys out there. If you have, let's say, a 20% gain in a stock and you're shooting for, let's say, 50%, you don't quite get to that 50%, you get to 20%, and all of a sudden the market starts running into a wall, starts pulling back a little bit, and you're up only 10% now at this point. Well, rather take that profit now instead of leaving it up to risk and who knows what's going to happen in the future. So we would take that 10%, close out our trade, walk away happy camper, and wait for the next buy opportunity. And then the last rule that we typically go over is set yourself a target. I know this seems very basic to a lot of you out there, but if you're brand new or even if you've been trading for a while, I've seen it happen time and time again where people forget to set themselves a target. And this is something that comes down to each individual person and really what's most comfortable for you. So therefore, ask yourself, if you're more of a short-term trader, maybe you're happy with a 20 or 30% gain. If you're a long-term investor, maybe you're happy with a 50, 100, 200% gain. Whatever that goal is for yourself, set that as your target. And whenever you hit your target, don't hesitate to close your position. Some caveats could possibly be that once you hit your target, if you still like the stock, then maybe you just sell half the position, take your gain off the table, and then reinitiate the position as a new position starting from that day. But if you want to keep it simple, you don't have to do all that. Once you hit your target, take your profit, you've made your goal, move on. And just as a reminder, as I've stated before, if the stock still looks like a good stock after you've taken your profit, you can always get back into that stock later, but at least now you've locked in your gains. I can't count how many times I've talked to subscribers over the years here at VectorVest who have had phenomenal gains in a stock only to watch it slowly dwindle away and end up closing the position at a loss. This is the worst possible thing you could do because if you're closing positions at losses, that means you're not making any money. And the whole purpose of trading in the stock market is to make yourself money. Therefore, always live by the saying, you can't go broke taking profits. So let's show you how to set that up based off of what we were talking about. So now that we're in the portfolio, what we're going to do is we're going to go to the edit in the upper right, come down here to build a custom trading system, take that off just for our example here today. We're going to go to automation rules for the long side because all of our stocks are long in this example that we're talking about. And the same would be applied for the short side if you do short stocks as well in your portfolio. But essentially we go to stop criteria at the top. And for basic purposes here, what we're going to use is a percent gain loss. Now the 1% rule, since we put 10,000 in each stock, the 1% rules we've talked about would be 10% on each individual stock. Therefore, that's never more than 1% of the overall portfolio value. And the gain side up here, let's just say we're happy with a 50% gain. So we type in a 50% gain. And then we go ahead and click on finish, say save, apply to existing positions, and there we go. Now we have all of our stops being set up based upon the purchase price. And this is a great thing about the VectorVest portfolios, especially if you're paper trading, is you can change the prices or you can keep them as is. So if you want to make it as realistic as possible, you have the ability to do so. But now if we scroll over to the right, we can see the 50% gain, 10% loss, all across the board on all 10 positions. It's a lot easier using the same stop criteria on all 10 positions because they're all the same size than having to try to calculate each individual stock stop criteria and then trying to manage all of those individually. Therefore, as we stated earlier, if you're brand new to the markets, this is a great place to get started to help you follow more of a systematic approach and to help new investors or even seasoned investors that have started off with bad practices or bad habits get into a less emotional trading plan for themselves. And the great thing, just as a side note here as we look, it tells you exactly where our stops are going to be based on the 50% gain, 10% loss on each individual stock. So that way you don't have to calculate it yourself and it takes all the guesswork out of your investing. So if you've enjoyed today's video, once again, hit that like button. Let me know if one of these tips helped you or maybe got the wheels turning for your own portfolio. I'd love to hear your feedback on this. And if you guys liked today's video, hit that like button if you want to see more, because I like doing these kind of getting back to the basic stock trading tips and tricks to help you become more successful and help you become more systematic investors rather than emotional investors. So until next time, take care. Adios. Toodles.